You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit TheOptionsInsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. Welcome to the Options Playbook, the program where we break down cutting-edge option strategies and explain how you can incorporate them into your own portfolio. Whether you're looking to grow your capital with some offensive maneuvers or protect your investments with defensive plays, you can find them all in the Options Playbook. The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities LLC, member FINRA and SIPC. Now, let's open the playbook and get started.
Welcome to Options Playbook Radio. I'm your host, Brian Overby, Ally Invest Senior Options Analyst and author of The Options Playbook. All right. Well, it is November, in case you don't have a calendar in front of you. And we did have some earnings that have been trickling in. And I wanted to highlight ROKU, because we talked about ROKU about 6 weeks ago or so, symbol ROKU. And I should also highlight that we are taping Options Playbook Radio on November 6th. It is a Wednesday. The markets are closed. And ROKU just announced earnings. So we've been kind of sticking with this long straddle plans. We've done a lot of derivations on a flat-out long straddle. But the rationale that was behind all of it was that we've had a few stocks, and Boeing was probably one of the better ones, where they've been in the news nonstop. There's been a lot of activity in the industry in general, and there's more news to be coming out. But the thing about the news is you never know when it's going to happen. And that's the situation where a long straddle makes sense to me. I never like to do a long straddle going into earnings because it's a known event. So the volatility is at the quote-unquote correct levels, if you will, because the event is known. So where I'd like to be in a stock is to be in a stock before the news announces, being that long straddle. And we've found a few of them where that has been the case. And if there's anything about 2019 as we come to the end of the year, there's been more volatility than less. So in hindsight, if you just think about that concept, that the markets have been more volatile, just even looking at the VIX index and what the volatility of the S&P 500 index options have been relative to the VIX, we've had throughout the entire year, the buyers of option contracts should have done better than the sellers of option contracts. And that goes along with one of the biggest misnomers in option trading, that the only way that you can ever be profitable in option trading is if you sell options, because X number of option contracts expire worthless. Now, there's none of that statement at all makes any sense whatsoever. What it really comes down to when you're thinking about buying or selling option contracts is really, are you getting the volatility right? That's the biggest component of, gee, is it better to do a long straddle and buy at that straddle, or is it better to sell the long straddle and be short that straddle? So that's what it really comes down to. Are you going to get the volatility right? Will it move enough that if you sell those option contracts that they'll become in the money? And will it not move enough if you buy the option contracts and the stock just sits and goes nowhere? So we're going to keep up with that theme. We're going to do a rinse and repeat. I've used that phrase a couple of times before. And we're going to look at Roku, because one of the things that I have not highlighted enough in the Options Playbook Radio is we're always picking our strikes around earnings when we're picking option strategies on stocks that are about to announce earnings, usually based off of the expected move. And what's the expected move? Well, that's the theme of today's show, the long straddle. You look at, well, what's the shortest expiration and what is the long straddle trading for? And a lot of times when I'll have reporters call me from the Wall Street Journal, from Barron's, from wherever they're calling from, and they simply just kind of want a quote, and it's one of the easiest things to get a quote in any of those publications. And you actually sound fairly smart. Overall, you say, well, Apple's going to be announcing earnings this week. Well, after they announce, the stock is expected to move around 5 or 6%. And everybody's like, well, where do you get that number from? Well, they're just looking at the long straddle. All you do is take the value of the long straddle divided by the stock price, you come up with a percentage. Now, with all that said, it never is in regard to directions. That's just basically the over-under on what the stock is trading at. In other words, what's the potential move after this known event gets announced, and the over-under is about 5%. The market expects that. If it moves more than that, that would be the over. If it moves less than that, that would be the under. And they don't always get it right, but I found it interesting. As I was sitting here picking the trade for the day, Roku announced earnings, and guess what the long straddle was trading for with 2 days remaining to expiration, the November 8th expiration on Roku, which last traded at, before the earnings announcement, 141.05. The change is $1.48 on the day, so it was up $1.48. It closed at 141.05. The long straddle was trading for $20, rounding off. The midpoint that I'm showing, to be exact, if I pull it up inside the Ally Invest option chains, I see is $19.90. We'll call it $20. That makes the math simple. And guess what? Roku announced earnings. And guess what? Roku is down by right now. Right now they're down, and at one point in time it was $20, but in the after-hours market, at this second, as we are taping this program, I am showing that Roku is down $18.85. So sometimes the markets get it right, and that's just kind of interesting because, once again, it's not in regard to direction. Didn't have any idea if it would be up or down, but it's trading fairly close to what the long straddle said it would, and it's trading to the downside. Okay, so let's go back and talk about the trade 6 weeks ago. Here was the rationale that was behind it. You can look at the program if you would like to in Options Playbook Radio. It was episode 279 about Roku and talking about a long straddle. It just came out that a lot of the cable providers were going to provide for free, quote-unquote, air quotes around it, because I don't know exactly what people were paying for their cable subscriptions, but free a box that would do basically what the Roku does on the Roku TVs. So the stock plummeted just because of the fear of that type of competition. The stock at one point in time in the month of, I think, let's look at the chart here, of September was as high as almost 175, and then it collapsed. And on that day, it came all the way down to 106. And I'm just rounding off here. So we probably taped the show on the 24th, and the 25th is when the podcast was out. But with that said, it was at 106. At that time, we said, well, this story isn't told yet. The market is down. Volatilities are still relatively okay because the news came out, and we were saying, well, there's going to be more news on this event, and lo and behold, the stock since that time has been as high as 151, 45 points higher, and it's been volatile on the way up. It hasn't gone straight back. And obviously, if you traded that, there were opportunities to make profits on the call side and on the put side, as that stock was very volatile over time. Now, we've had the known event. We've had the earnings. The stock at 141.05. The long straddle trading at $20. And I just like to point this out because here's what the paper trade is going to be this week. This is not meant to be a recommendation by any means. As always on Options Playbook Radio, we're here to just learn. And we're not really looking at underlying stocks and making forecasts on stocks. What we're talking about on Options Playbook Radio is we have 40 different strategies in the playbook. One are certain times where the pricing, quote-unquote, the pricing seems to work for this strategy. Because I get asked a lot, like, what's your favorite strategy? And I don't really have a favorite strategy. It's all about what is going on with the option prices relative to what the current stock is doing and what the marketplace is saying. So I think this will be an interesting opportunity, interesting learning opportunity. I'm actually going to take a screenshot of the long straddle right now, the 141 put, 141 call. Now realize these were based off of the 141 closing price in ROKU today, so that was $20 before the earnings. And then just see what the long straddle will trade for tomorrow. What will it be at? Let's look at around noon. I'll pop in and get a quote, or maybe even closer to the close. At some point in time tomorrow, I'll just look at where the stock is at, and I'll look at the most at-the-money long straddle and see how much less it is trading for with the same expiration. And that'll give you just some high insight as to what can happen to the implied volatility of a stock like ROKU after the earnings have been announced. Okay, and with that said, then I'm going to look at the long straddle. And I'm not going to have an actual dollar amount because the market hasn't opened yet. So that will be our paper trade for the week, if you will. I'm going to go in at around noon tomorrow. I'm going to take a screenshot of this long straddle. And it makes sense to me to do the long straddle after the earnings. The earnings report said it was trading very high as far as implied volatilities are concerned. It was to put a number on it, at the money, the 141 strike call and put on average had an implied volatility of approximately 235%. So just a crazy amount of implied volatility. And if I look at the Ally Invest, just 30-day implied volatility, we're not talking about a 2-day or a 3-day in front of earnings, but the general volatility, the 30-day, based off of the Ally Invest implied volatility charts, on the high end for the 30-day is up around 100%, and on the low end, it's down around 50%. So we could see a precipitous drop in volatility after the earnings, after it settles down a little bit. And that's when I would look at doing the long straddle, because once again, I don't believe that this story is over. I think that there's potential going into the new year of more news coming out as to how ROKU is going to react to this, if there are going to be any other competitors that are going to follow the lead of other people in the sector and start offering this type of product for free, and what people think about that. So that is going to be our paper trade for the week. So here's what the paper trade is. Let me try to summarize this. Today, we're taping Options Playbook Radio. It's November 6th. The markets are closed. Going into the close, ROKU is announcing earnings after the close. ROKU closed at 141.05. That was up $1.48 on the day. We looked at the long straddle with the shortest expiration, the November 8th expiration. That means you have 2 full days of trading. That long straddle is trading at 1990. That means that we are buying the at-the-money put and we are buying the at-the-money call. And what we're going to do for a paper trade this week is we're going to wait till the market's open, and around noonish or so, and I'll have the time stamped when I decide to actually grab as a paper trade. We're going to look at buying the long straddle, the most at-the-money long straddle with that same November 8th expiration, and we're going to look at what that's trading for. And then that long straddle, ultimately, we're going to go out farther in time, and we're going to actually buy a longer-term long straddle. We're not going to buy the November 8th expiration, and see what happens going into the new year in ROKU. So that's it for this episode of Options Playbook Radio. If you have a topic you'd like us to discuss on the show or a question you'd like us to answer in the program, you can send them directly to me at TheOptionsGuy@invest.ally.com. Thanks for listening. We'll be back at the same time, same place next week. Until then, may all the options you bought finish in the money and all the ones you sold finish out.
The Options Playbook is brought to you by Ally Invest. Anything mentioned today is for educational purposes and is not a recommendation or advice. Options involve risk. Please refer to ally.com/invest/disclosures to review additional risks involved with trading options. Securities offered through Ally Invest Securities, LLC, member FINRA and SIPC. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.